Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and the top stories this afternoon are Midcaps trade flat, slightly underperforming large pairs. The Nifty holds above 17,750, erasing early losses.
Mahindra CIE gains after posting record margin on the back of strong growth. The stock surges in trade.
MCX slumps after its chief technology officer exits. Concerns over escalated software costs also weigh down on the stock.
AU Small Finance Bank slips on concerns over margin shrinking and bearish analysts' commentary. High costs continue to weigh on deposits as well.
KPIT Tech and Voltas gain ahead of results later today. KPIT has announced a dividend of 2.65 rupees per share for FY23. Large deal wins are expected to drive growth in this quarter, while for Voltas is seen delivering a steady Q4 with a 12% revenue growth.
Okay, some of these mid-caps which are in focus, and of course the big focus has been what's happening with Gujarat state-owned PSU stocks. They all are up in trade today, and that's the mid-cap space that we are focusing on as well. But overall, it's a quiet day for our own markets. Nifty is up 20 points. It is mirroring what we've been seeing in last couple of trading sessions as well. So mid-cap index, that is the one that should also come up for you on the screen. That one is also up 20 points. It is absolutely flat with some positive bias that we are seeing right now. Overall, the texture of the market remains on that consolidation level at that 17,788 mark. We'll have to see whether that continues or not. But for now, yet again, we are seeing a day where we are seeing some gains. But of course, they are slower than what we've been seeing in last couple of trading sessions.
Indeed. So let's find out where the action really is. This is our segment, Midcap Movers. Vivek is here with that list. Vivek.
Well, thank you so much for that. When you're talking about the mid-caps, the limelight has been stolen by all of the Gujarat-based PSUs. But some other stocks that we are focusing on, especially within the mid-cap IT space, a couple of stocks are doing very well. In fact, look at Saxoft. This particular stock is up 50% in the last 12 trading sessions. Even have a look at Newgen Tech, up almost 4.5% in today's trading session. Couple of other PSUs that after a very long time are doing quite well. So names like MMTC, after a while it's doing very well in the session, up 11%. Even Dredging Corporation up almost 4.7% in the session. Also, after a while, you're seeing names like Skipper as well as Lemon Tree do well in today's trading session. Some stocks that we're tracking on the back of very strong volume action. So SpiceJet, after a while, a lot of news flow in this particular name, but the stock is up 6% on strong volumes today. After a while, defense major Astra Micro is up. Philips Carbon Black, has cooled off a little bit from the day's high. And Indus Towers, after a while, this particular stock is seeing some volume action. On the other hand, some of the stocks that continue to see some down move. Ipca Labs for the second straight session, down on strong volumes as well, given up almost 15% from day 4 yesterday's high. Aavas Financials down on strong volumes today. Vedanta as well as Pokerna in today's trading session are some of the other stocks that are seeing a bit of profit booking.
All right. Thank you so much, Vivek, for joining us. So that's a comprehensive list of what stocks are moving around in the broader markets. It's a good time to also get a technical check on the market. Samir Shravan of Angel One is joining us for just that. Samir, good afternoon. Thank you so much for joining us. Well, again, it's a quiet day on our markets. Just now we saw Bank Nifty slipping into the red as well. What are the charts suggesting?
Good afternoon, Sonal. In fact, since last 7 to 8 trading sessions, the market has done, in fact, key indices have done nothing. Barring, Monday session where we see some action in key indices. Overall, if you see, market has slipped into a consolidation mode after seeing a, sharp rally from the levels of 17,000 to 17,898. So it's a part of, broader degree time-wise correction. So it's considered as a healthy sign. And with Monday's price action, 17,500, 600 has become a very strong support for this monthly expiry. So overall, the bias remains positive, but the major action lies outside index. Every now and then we are seeing some themes are getting unfolded. Recently, we saw good traction in most of the pharma stocks. Since the early part of this week, we have seen most of the railway-related stocks buzzing. And since today, most of the Gujarat state-owned PSUs are buzzing. So every now and then, some of the other thematic moves are getting unfolded, and the focus lies there itself. So we believe that one should stick to cash segment stock. The broader end of the spectrum is doing well. One should stick to that, and we have a couple of recommendations from the cash segment itself.
What would your recommendations be, Samit?
First one would be Triveni Turbine. This stock has been maintaining its sturdy structure. Series of higher highs, higher lows can be witnessed in all time frame charts. Today, this stock has managed to give a decisive breakout. So we believe that from here on, this stock is likely to move higher. The positional target would be somewhere around 394. It can be bought with a stop around 338. Apart from this, Philips Carbon PCBL looks quite good. Stock has already confirmed its price and volume breakout. So 132 is a positional target. It can be bought with a stop around 120.
Okay, all right. Thank you for that, Samit. That is a technical check on the markets. But of course, the big story also remains the earnings that are coming in thick and fast. So we'll connect with Make Money Organics, Mr. Maulik Patel, who's the chairman and managing director of the company, to discuss their Q4 numbers and the outlook going forward as well. Stay tuned for that.
Let's you and me step out and see how blue the sky, how tall the trees. Cause forever.
Skoda brings you Kushaq and Slavia, India's safest family cars.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family, am I right?
Let's close the deal.
Thank you.
Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
गुणवत्ता की बात चली है, एक नई शुरुआत मिली है, परिवर्तन को गले लगाकर अपनाएंगे Z। वोकल फॉर लोकल का नारा, अब एक ही लक्ष्य हमारा, आत्मनिर्भर बन जाने को अपनाएंगे Z।
Register with Ministry of MSME's Z certification scheme today.
After the resounding success of India Inc. On the Move 2022 in Gurgaon, this year we're coming to Mumbai to explore how sustainable practices are the key to long-term success of the manufacturing industry. Get valuable insights from industry luminaries, experts and policymakers on how your business can prosper with this new paradigm for growth. Only at Forbes India and CNBC-TV18 present India Inc. On the Move, Sustainable Manufacturing, powered by Rockwell Automation.
अभी तक मटेरियल आया नहीं?
पैसे नहीं है।
अच्छा।
यूप्रो कैपिटल का ग्रोएक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी।
इतनी जल्दी?
Welcome back. KPIT Technologies Q4 numbers are up for you on your screen. The company has clocked in an 11% jump in the profitability. The EBIT has come in at 142 crore. This would imply the EBIT margins are practically unchanged on a quarter-on-quarter basis at nearly 14%. We are expecting a pretty healthy top-line growth for the company. JP Morgan estimates were that constant currency revenue growth would come in at 5.5% on a sequential basis, given the slew of order wins. Over the last 6 months, the company has announced 2 very large deal wins. One of them was from Honda and the other one was from Renault. 1020 is the top line for the company. That's a revenue growth of 11.2% on a quarter-on-quarter basis, and on a year-on-year basis, the revenue growth is 56%. So the top-line growth is looking very smart, 11.2% in terms of the revenue growth. the margins are unchanged, which is why the revenue growth of 11% is directly flowing through into the company's profitability. The stock is holding up with a gain of 1.5%, but remember, KPIT Technology has been quite the outperformer. It's gotten re-rated ever since those large orders have been announced in the software-defined vehicle space. And this year itself, the stock is up 27%, and from its 52-week high, the stock is away by just nearly 5%. So at a time when the IT index is struggling and many of the large cap IT names are far away from their 52-week high, KPI Technology very recently was at a fresh 52-week high. Basic numbers right now, but they're looking good. 11% revenue growth, 11% bottom line growth, and margins stable on a sequential basis. Try and get some more details, but in the meanwhile, we've got a management.
Oh, yes. So that's about KPIT Technology. Thank you, Rima, for that. We'll get going with some more results analysis now. Make Money Finechem saw a subdued quarter. That is because there was contraction in their margins, and profit too came under pressure. The stock was down 4% yesterday, and today again it is at the day's low. To discuss quarter four numbers and the demand commentary, we are now joined by Maulik Patel, who is the chairman and MD at the company. Maulik, good afternoon. Thank you so much for joining us here on CNBC-TV18. Well, there has been some margin pressure that you've seen this time around. Can you explain to us what the reason was? Was it higher raw material prices? Was it higher operating expenses? And also, if you can split the revenues for us in terms of pricing and realizations, what is the outlook on pricing now?
Yeah, good afternoon. Actually, the prices of in this year, when the beginning of this year, the prices were on the big side because of the after COVID, everything was rally. All the chemical industry is doing great because of the oil prices, and the world is doing great. Europe is doing great. US is doing great. So every product is in shortage. So after in the last couple of quarters, there was a prices started coming downward, and we see that even though we have a high inventory little bit. So, the prices also adjust according to the raw materials going down. But meanwhile, you have a high inventory stock of the raw materials. So it will take, a couple of quarters to move out, from the system. So probably from the next quarter onwards, I think we are going to be back again as per our standard EBITDA margin, which is 28 plus or minus to what we used to say in the past. But in the beginning of the year, what was the original margin was there? I think it is in the peak situation, which is not a normal margin. But 28% plus or minus 2 margin, we expect it is going to remain same even in this financial year.
Okay, but can you break up the top line growth? What exactly was the volume growth number?
So
and what was the realized?
Yeah, as a year. Yeah, in the Q4, we has a volume growth of 15% because in last 2 quarters, we have commissioned a couple of projects which has generated volume growth for our company. And the entire full volume growth we are going to get from all the 3 projects which we have commissioned in last financial year, second half of last financial year, we are going to get advantage in the current financial year.
Okay, so when you talk about pricing coming off from the January or this year starting levels, how much has it come off by? And do you expect that trend to continue, or prices have stabilized both in the chlor-alkali and the derivative segment?
So normally in the chlor-alkali and then the specialty and derivative segment, the prices are in the basis of the raw material decrease, and the energy prices decrease, because of the high energy cost in the Europe, shortage in the Europe energy, the prices was on the peak in the beginning, in the second half of the year. But, it has started coming down from the beginning of this quarter. And we understand that the current situation based on the current energy price and the oil price, we feel it is a bottom out kind of situation. So now when the market will start picking up from the next quarter or our current quarter, end of this quarter or the next quarter onwards.
Okay. All right. So you also spoke about a couple of capex that will be coming on stream. FY24 has some of it lined up. Is that it in terms of capex? You spoke about percentage of project completions as well. Many of them will come in quarter 4 of FY24. What kind of capex are you looking at in FY24 with the additional capex? What kind of asset turn or revenue potential will you see? And is this the last leg of capital expenditure for your company?
So, as I mentioned, in the second half of last financial year, we have commissioned 3 projects. The actual volume growth will happen for those projects in the current financial year in FY24. And in FY24, we are doing an expansion of the CPVC project as well as the chlorotoluene project, which is first time in India, which will happen the volume growth in FY25. So continuously, you know, we are doing the expansion, which will generate a volume growth in the company. So volume growth, we are expecting 20% every year. So based on that, we are going to do continuous capex year on year. And then the chemical projects, normally it takes 1.5 to 2 years time to commission. So if we think now, then only we are able to commission the growth and forecast the growth for generate the growth for the FY26. So
okay.
that is going
just
to be
a follow-up. Yes, just a follow-up in that. When you say 20% volume growth is what you're expecting in FY24 and FY25 as well, 20% revenue growth guidance is what you've given for FY24. So do you mean it will only be volume-led this time and realizations are expected to be flat?
So so no, realization also we are expecting, because, you know, current realization is lowest level right now, and we expect that because of the demand will pick up from the second half of this financial year. So I think we are also going to generate the revenue growth also from the current financial year. So we are expecting 15 to 20% growth in the revenue as well in current financial year as well as next financial year.
Okay. No, the question actually my colleague was asking, if the top line growth is going to be 15 to 20%, you earlier told us that the volume growth is also going to be 20% for next year, which basically means that there is going to be no improvement in realization. Your entire top line growth will be driven by volumes. So could you clarify a bit on the dynamics for next year?
Yeah, so based on the current situation, yes, it is like that, but we are expecting the prices may improve from the second half of this financial year. So it may increase. So we are conservatively saying we are able to achieve 20% volume growth as well as the revenue growth.
Got that. So if realizations pick up in the second half of the year, then your full year revenue growth will be more than 20%, right?
That's right. Yeah.
Okay, just one more question. I think you started off by saying that you're in the process of running out your high cost inventory. How much is left on the books? Is there a way to quantify that? And this will hurt you only for,
Yeah, so it is already we have quantified, and already we have taken care in the last quarter, because it is on the rollover basis. You know, normally when the prices is going down in last quarter, which will impact the inventory which you have in the books right now. So when the price goes up, you are getting an advantage. When the price goes down, you are getting a disadvantage. So this is the part of the cycle only. Yeah.
Okay, yeah, exactly. That was going to be my next question. You have a target of 5,000 crore rupees of revenues by FY27. Considering that some of your products are the cyclical kinds where pricing can be up and down, is that 5,000 crore achievable? Is it a possibility that you will tweak that number, or going by current scenario, that's going to be your target?
No, based on the current scenario, that is going to be our target. And as you see that now we are entering into the product where it is more specialty chemical, or the sustainable fluctuations are very less. So we are adding more and more chemistry on the down the line and the derivative segment and the specialty side. So where the fluctuation is less. And we are still stick to it, our 5,000 crore target of FY27.
Okay. And last question before we let you go. You invested in tanks in Europe and USA. That is for epichlorohydrin. Can you tell us how much is exports as a percentage of revenues right now? And once your exports for ECH grow in FY24, how much additional revenue will you see from there?
So ECH currently in this financial year, we have achieved 40% capacity utilization, and the rest of the, I think 80% we are going to start generating from the second quarter of this financial year. And the export volume, we have not started big in terms of as a company as a whole, as a 4% only. But in ECH specifically, you know, we are going to do 50% export in the next financial year and 50% domestic. That was our budget we have done. And as a company as a whole, we are going to achieve around 10% of the export volume.
Okay, we'll leave it at that. Thank you very much, Maulik, for joining in. That's Make Money Fine Cap. The stock is a bit subdued in trade for the second day in a row. Get into a break. On the other side, we'll get chatting on other mid-cap stocks. We'll also tell you what our Midcap Spotlight stock of the day is.
पिछले 6 सालों से हर रोज यही हो रहा है। ये वो SIP है जो चौधरी साहब अपनी बेटी के लिए कर रहे हैं। जब जिंदगी जीने का तरीका ही SIP है, तो जिंदगी के लिए SIP क्यों ना हो?
An investor education initiative by HDFC Mutual Fund. Mutual Fund निवेश बाजार के जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
हमारी प्रार्थना होगी स्वीकार।
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
A. Balasubramanian decodes the investment space for retail investors and draws out the do's and don'ts on how to grow wealth by goal-based investing through mutual funds. Watch all this and more on Mutual Funds Sahi Hai. Give wings to your savings in association with News 18 Network at these times.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
Welcome back. Still tuned into Midcap Radar on CNBC-TV18. Absolutely flat for the markets yet again. The bank Nifty has picked up a little bit. That one is up around 63 points. But of course, earnings continue to dominate mind space, and we have the Midcap Spotlight stock for you. Focusing on Rallis India today because that stock is under some pressure. This fall is not big, but the numbers are really weak for the company. Yet again, it's a consecutive weak performance by the company, and this time around, losses have in fact widened despite whatever the industry has been seeing. Now, losses have widened. That is because of high cost inventory and higher expenses, which have dented performance. Revenues are up 3%, but EBITDA loss has come in at 66 crore rupees, which compares with 3 crores in the year gone by. Loss has come in at 69 crores versus loss of 14 crores, and gross margins, they are down 800 basis points, coming in at 26.7%. The company says exports are down 25% YOY, they're down 7% sequentially, and domestic crop protection business also reported flat YOY growth, and there was an impairment cost of around 23 crore rupees, which was accounted for in this quarter as well. So there were a lot of one-offs as well that impacted company's performance in this quarter. The company recently, in fact, a few hours back, did their conference call where they said 14% revenue jump was supported by 8.5% price growth and 5.5% volume growth. However, pricing has peaked in FY23 according to the company. It has softened and is expected to decline going forward, and that is a point to worry for the markets and the company. High channel inventories in domestic as well as international markets is what they saw, and they expect volume-led growth, but there will continue to be pressure on margins due to high channel inventories. So high channel inventory, that's a problem that's happening across the agrochemicals and the chemical space as well. They expect to scale up products which they introduced recently. They're focusing on new product development, marketing and distribution as well. And for FY24, the capex is 150 to 170 crore rupees, where they are also expecting last phase of their multi-purpose plant to be completed very soon. So the key takeaway is they expect margin pressure to continue, and that is something which could worry the street because they've not been performing well for last couple of quarters, and that has continued now as well. Focusing on Tata Chemicals as well because Rallis is a subsidiary of the company. But that is about Rallis. We just got KPIT Tech's numbers. Rima, you've been able to go through it despite it being such a busy show. Tell us more.
Very strong numbers, you know, for KPIT Tech. One, firstly, in terms of Q4. Their constant currency revenue growth is 8.5% in Q4. JP Morgan estimate was for 5.5%. So it's like a solid beat on the top line as well. So that's point number one. Secondly, for Q4, the deal wins have come in at $423 million. This is a growth of 55% on a quarter-on-quarter basis. And even on a year-on-year basis, if I look at the deal wins number, it's up to 38%. Remember, we've been saying how KPIT Tech has been flying high. It's gotten re-rating because of the large deals the company has won, Renault as well as Honda, and that's getting reflected. 8.5% top-line growth. This is much higher than what we typically see. And just to put it in context, Infi had a revenue decline. So 8.5% QOQ is very, very strong and ahead of JPM's estimates, that's JP Morgan's estimate of 5.5%. The company's deal wins are up 55% QOQ, 238% on a year-on-year basis. And thirdly, look at that FY24 guidance, which is flashing for you on your screen. Revenue growth at 27 to 30% and EBITDA margins of 19 to 20%. Now, I was looking at some of the consensus expectations. For next year, consensus expectations were that growth will be 27.5%. So basically, the company is guiding for growth, which is slightly ahead of consensus. Because if you take the middle of the guidance, we're at 28.5%. So this is ahead of consensus. Refinitive's consensus expectations were closer to 27.5%, which basically means the company is more confident about growth, not falling off and sustaining at these very high levels at 19%. So, even on, margins, I'm just trying to get what the FY23 margins are. Okay, FY23 margins are at 18.9%. Next year's guidance is 19 to 20%, which means that in FY24, margins will also improve. 19 to 20% is the margin guidance, which compares with 18.9% that they clocked in for the full year last year. So strong Q4, especially on the top line in deal wins. FY24 guidance is very, very robust. And I think it's probably closer to the upper end of what the analysts were anticipating, because maybe everyone thought they would be conservative. And maybe this is a conservative guidance, right? According to, in the management's viewpoint, who knows? But I think the stock has started reacting positively. Just, as we wrap up the show, let's pull up that intraday chart. Okay, it's still up close to about 3%.
So all the mid-cap IT companies, they've done really well this time.
They've done pretty well, right? Whether it's Cyient, whether it's, Mastech, KPIT Tech, all the numbers are pretty okay. Yeah. A good set. Okay, out of time on Midcap Radar. Thank you for watching your stocks when we return.